What's up YouTube, it's Barrett back at it again with another video. Today we're talking about GBTC, the Grayscale Bitcoin Trust, and I'll be explaining how it's different versus just buying regular Bitcoin. I've had a lot of smart friends who actually work in finance who have misunderstood the difference between GBTC and spot Bitcoin in the past. And so I imagine there are a lot of regular everyday investors out there who don't understand how Bitcoin can go up 80% and GBTC can only go up 10% in the exact same period of time. So if you guys watch until the end of the video, I'll be covering what GBTC is. We'll talk about what the discount and the premium on GBTC means and how that discount and premium comes to be. I'll cover why anyone would ever want to buy GBTC. And then finally, we'll talk about what the approval of a spot Bitcoin ETF would mean for the GBTC product. And just like everything else on this channel, none of this is financial advice. This video is just here to help you understand what is the difference between investing in GBTC and investing in spot Bitcoin. And there's plenty of risk to go around investing in either one of these assets. So go down below and smash a like button for Discount Bitcoin and let's level up your brain. To understand what the GBTC stock ticker is, first we have to understand the Grayscale Bitcoin Trust institutional product. Basically, Grayscale said, hey, we want to make a fund that tries to track the price of Bitcoin by just buying up a bunch of Bitcoin. But since a Bitcoin ETF hasn't been legally approved in America by the SEC, Grayscale had to create what is called a closed-end fund. I'll leave the Investopedia article to what is a closed-end fund down in the description if you want to learn more. But what this means in the case of Grayscale is that wealthy institutional investors can give Grayscale money, and then Grayscale can use that money to go buy more Bitcoin and hold it in their Grayscale Trust. And then Grayscale gets to determine if or when Grayscale the Trust ever actually sells any of that Bitcoin. So what has happened over time? So historically, what this has meant is that in large bull market cycles of Bitcoin, lots of institutional buyers have piled money into the Grayscale Bitcoin Trust. Grayscale has accumulated a bunch of Bitcoin, and it has very rarely ever actually sold any of that Bitcoin. So over time in massive bull markets that have happened in Bitcoin, Grayscale will accumulate all of this institutional money, and then Grayscale will say, oh my gosh, we've got all this money, let's go buy more Bitcoin. And then Grayscale basically creates an inflow into their closed-end fund of more Bitcoin. And then that process has repeated itself for a while. This has led to Grayscale accumulating lots and lots and lots of Bitcoin over time. The estimate that I saw was that Grayscale owns now around 643,572 Bitcoins. For comparison, MicroStrategy only holds 125,000 Bitcoin. Tesla holds about 43,000 Bitcoin. El Salvador holds about 9,500 Bitcoin. And the largest two Canadian Bitcoin ETFs combined hold about 53,000 Bitcoin. So all of those entities that we just talked about combined only hold 35% of the amount of Bitcoin that Grayscale holds. I'll leave a link to all those stats down in the description. It's actually insane how much Bitcoin Grayscale holds when you compare it to these other institutions and countries and companies. So now that we understand Grayscale as an institutional product, let's talk about what is GBTC, that stock ticker with the 2% yearly management fee that you can buy in pretty much any brokerage account. Basically, Grayscale took that institutional product that is just a closed-end fund with all of these Bitcoin in it, and it moved that closed-end fund into brokerage accounts so that retail people like you and me can invest in an index of that product that they've created for these institutional buyers. And right away, you might see the problem with that. If Grayscale has 600,000 Bitcoins sitting in that institutional trust product, and then you and I buy a bunch of GBTC, the now overall value of GBTC is above the number of Bitcoins that are held in that Grayscale institutional product. Because when we went and bought shares of GBTC, Grayscale didn't go and buy any more Bitcoin. So if I put $50 into GBTC, Grayscale doesn't go put $50 into Bitcoin and put that into their closed-end fund. And then the opposite is also true. If I sell $50 of GBTC, Grayscale is not selling $50 of GBTC out of that closed-end fund. So let's say a bunch of retail traders like you and me buy up a ton of GBTC, and now GBTC is trading at a value of 660,000 Bitcoin when it really only has 600,000 Bitcoin sitting in its trust. This scenario would be called a 10% premium to NAV, or net asset value. And in this case, net asset value just means how much is the 600,000 Bitcoin that GBTC has in its trust actually worth right now. And obviously, if a premium to net asset value can exist during bull markets, discount to net asset value can come about during bear markets. And this would mean that so many people have sold GBTC that the actual value of GBTC is worth less than the amount of Bitcoin that Grayscale has in its GBTC trust. So Grayscale still has those 600,000 Bitcoin, but maybe Currently now, the actual price of all the shares of GBTC are only worth 540,000 Bitcoin. And so that scenario, Grayscale would be trading at a 10% discount to net asset value. So for a lot of Grayscale's history, GBTC traded at a premium to net asset value, but in 2021, that premium turned into a discount. So holders of GBTC actually lost more money than holders of Bitcoin when the market drew down in the middle of last year. And there's a great chart that I'll throw up on screen now and leave a link to down in the description that does an awesome job of visualizing this information for us. In December of 2020, at sort of the local peak of this GBTC premium, GBTC was trading at a 38% premium to the amount of Bitcoin that it was actually holding. That's almost 40%. That's like a crazy high number. And by May of 2021, GBTC was trading at a 17% discount to the amount of Bitcoin that they were holding. Over that period of time, Bitcoin was up 45% and GBTC was only up about 10%. And if you look at the price from December of 2020 all the way until today, you'll see that GBTC is still only up about 10%. Whereas in that exact same time period, Bitcoin is actually up around 82%. And you can really attribute this difference to the fact that GBTC was trading at an almost 40% premium back in December of 2020, whereas today in 2022, GBTC is trading at a 26% discount to the spot price of Bitcoin. So that spread of almost plus 40% to today almost minus 30% is where you're seeing that discrepancy in the Bitcoin to GBTC price, where Bitcoin is up about 70% over Grayscale in this same period of time. And it's all because during that time, people were buying and selling this GBTC stock, but GBTC wasn't making inflows and outflows from their trust product at the same time as people were buying and selling this stock. And so the value of the trust became disconnected from the actual spot value of Bitcoin. So today, Grayscale is holding about 643,000 Bitcoin, but the market is saying that Grayscale's Bitcoin that it's holding is only worth around 475,000 Bitcoin. And because Grayscale controls when it makes inflows and outflows from this trust product that's underlying the GBTC stock, they're happy to just collect this 2% management fee from all of us and let GBTC continue to trade at a discount to net asset value. Or at least that's what the cynics would tell you. And if you're looking for more of those cynical opinions, I'll leave an article down in the description that was written by a guy in December of 2020 who basically called this entire thing happening and was pretty much totally correct based on the events that played out in 2021. So why would anyone buy GBTC if it doesn't trade exactly like Bitcoin does? I'm sure you have family members just like me who don't want to set up a Coinbase account or don't want to set up a Gemini account, and they would rather do all of their trading in their legacy Charles Schwab or E-Trade accounts. And those same family members who don't want to open a Coinbase account are definitely not going to care if someone else is holding their Bitcoin keys for them because they're unwilling to even buy spot Bitcoin. They're totally happy to have Grayscale custody their coins for them and get, not perfect exposure to this asset. Or maybe you have some friend like me who wants to put money away for retirement in maybe a Roth IRA, but they're skeptical of the fees that are being charged by these self-directed IRA products that allow you to hold physical Bitcoin. And by the way, if you guys are looking for what is the best tax-advantaged way to save Bitcoin for retirement, I did a video last week where I compared all of the major options, and I'll leave that link somewhere up here in the cards. You're welcome. Or maybe you have other friends who are also like me who think that eventually that discount to NAV is going to be closed and it will be an immediate plus 30 or whatever it gets down to % gain if and when it gets converted into a spot ETF. And to be clear, that is definitely not financial advice. And people who are much smarter than I am, like Nassim Taleb, who's the author of many classic books like Anti-Fragile and like Black Swan, would describe people like me who are buying GBTC right now as dumb money. Never meet your heroes. Taleb would call me dumb money in this case because the smart money people would have never let this discount come into existence if they thought there was a good chance that the discount would ever be closed. Basically, if all the smart money right now thought GBTC was ever going to come back up to NAV, they would be buying and buying and buying to force it up there so they could take advantage when that discount finally closed. This is one of the last tweets I ever saw from Nassim, and then I think he blocked me for having laser eyes or just being a smart or something. Again, never meet your heroes. His books are really great though, and so if you want to check those out, I'll leave links to those down in the description. Next, let's talk about how that discount to NAV could be closed and GBTC holders could gain an instant 26% premium on their GBTC holdings. Again, the whole reason that this discount or premium exists to NAV is the idea that if I buy $50 of GBTC, Grayscale is not buying $50 of more Bitcoin. And if I sell $50 of GBTC, Grayscale is not selling $50 of Bitcoin out of their closed-end fund. If they did that every day, it wouldn't really resemble a closed-end fund anymore. It would more closely resemble a Bitcoin ETF. And like we covered earlier, Grayscale currently holds 12 times as much Bitcoin as the two biggest Canadian Bitcoin ETFs combined. But here in America, the SEC and Gary Gensler are protecting investors like you and me from the convenience of a Bitcoin spot ETF. The SEC has, however, already approved a Bitcoin futures ETF that trades on the rolling future price of Bitcoin based on the CME futures market. But that's not really what Bitcoin investors who just want price exposure to Bitcoin actually want. We don't want the 1 month future price of Bitcoin. We want today the spot price of Bitcoin, where if we buy $50 of this ETF, the ETF will go buy $50 or about $50 of Bitcoin. And if we sell $50 of the ETF, we want the ETF to sell about $50 of Bitcoin. And maybe there's some small management fee like other Vanguard ETFs. Not this massive 2% fee just for holding the Grayscale Bitcoin Trust, which doesn't even track the price of Bitcoin. At this point, it's just a worse ETF product. Grayscale has dedicated a lot of resources to build out a team to turn their closed-end fund into a full-fledged ETF. And if they're successful, they'll be by far the largest Bitcoin ETF in the world when you compare them to what's already out there. So hopefully at some point in the near future, the SEC can allow US investors to invest in a spot Bitcoin ETF and can allow Grayscale to basically mark to market the value of all of their Bitcoin. And what that would mean is an instant bump back up to zero from right now -26. It would be an instant conversion back to the spot price of what they were holding. Unfortunately, betting on the government to do that in some sort of timely fashion, I think is not a great bet to be placing. And the SEC has already turned down spot ETF applications from basically every company in the industry, including Grayscale, Fidelity, and Gemini. Until then, GBTC will continue to not trade one-to-one with Bitcoin, continuing to either trade at a discount or once again trade at a premium to the value of the Bitcoin that's actually sitting in their trust. And if that discount to NAV grows even deeper on the GBTC product, then GBTC investors and Grayscale themselves will have a real serious problem on their hands. So if this video helped you guys understand the difference between GBTC and spot Bitcoin, please go down below and leave it a like so that YouTube will share this video with other people. I really think it's going to help out a lot of investors who right now are just blindly investing in something that they think tracks the price of Bitcoin when it really doesn't. If you guys want to learn even more about GBTC and Grayscale and this whole spot ETF debacle, I'm going to be leaving podcast links down in the description to Nick Carter and the On the Brink podcast team. They're pretty much my go-to podcast for any new news on GBTC or just Bitcoin regulation stuff in general. Also, comment down below if you guys have any questions and let me know what you think about GBTC. I do still respond to all the comments. And then come back here every Monday at 10 a.m. Eastern for a new video. I love you all. Goodbye.